Good day. So we are continuing with our video on Ipsas 1. And then, like I said, we are going to look at the components of financial statements. So component of financial statements, which I'm not going to waste time on. Now, the components of financial statements are almost the same as that of the IFRS, just that there is one additional thing that I'm going to introduce for you. So from what we know from the IFRS, the components of financial statement, here we have the statement of financial position, statement of financial performance, statement of financial position, that is according to Ipsas 1. And then we have the statement of financial performance. And then we also prepare a statement of changes in equity. So statement of changes in equity or changes in net assets. And then we prepare statement of cash flow, or what we call cash flow statement. So statement of cash flows. Then there is one more statement that we will prepare, which is not in IFRS. Now, you know, in public sector budgeting, when you present a budget, okay, and then you prepare your actual account, you need to show, according to Ipsas, you need to show a statement that is comparing your budgeted figures with the actual figures. And if there are any variances, you show. It's either you are preparing that as a separate statement, or on your actual financial statement, you indicate a line for your budgeted figures so that the users can see that these are your budget figures and these were your actual figures. And so most of the time they prepare that statement in addition to the financial statement, a statement comparing budgeted figures with actual figures. So that is the fifth statement that you prepare. Statement comparing budgeted figures with actual figures. And for the public sector, it is very important because of accountability. And then number 6 will be the normal thing that we know, notes to the financial statement, which will include the accounting policy that was adopted. So these are 6 elements, components. These are 6 components of financial statement. If it was IFRS, the 5th component will not be there. But in Ipsas, it is there. So like I said, we may look at it as the same, but you will see that there are differences, slight differences as we move on. So these are 6 components of financial statement according to Ipsas 1. And I'm sure that we are very much aware of many of these components. Okay. Now, let us look at the purpose of financial statement according to Ipsas. Now, the purpose of financial statement according to Ipsas is to provide information about, please take note, to provide information about 1, the financial position of the organization, 2, the financial performance of the organization, 3, the cash flow position, these 3. And it is almost the same as what we know from the conceptual framework for financial reporting. So what we are saying is that the Ipsas, the purpose of financial statement. So let me just say purpose of financial statement according to Ipsas 1, to provide information about A, financial position of the organization, B, to provide information about financial performance, and C, to provide information about the cash flow. So what we are saying is that Ipsas is the purpose of that financial statement that we prepare is to provide information about 3 things: financial position, financial performance, which is also, of course, when we talk about financial performance, the financial position is being reviewed by the statement of financial position. Financial performance is being reviewed by both the statement of financial performance and the statement of changes in equity. Both of them review financial performance. So it is not only the statement of financial performance. Kindly take note. And then also to review information about cash flow position. So these three, for the budgeted, it is still reflecting this, and the notes, they are also explaining the statement. So the purpose of general purpose financial statement, according to Ipsas, is to reveal information about: one, the financial position of the organization; two, the financial performance of the organization; and then three, the cash flow position of the organization. That is the purpose. So there is a difference between writing the components, and there is a difference between you answering a question on purpose. Purpose, you have to make sure you are summarizing it into three: financial position, financial performance, cash flow position. But when it comes to the components, there are six. But the purpose of general purpose financial statement, according to Ipsas 1, is to provide information about the financial position and the financial performance and the cash flow position of the organization. That is what you need to know. Okay. Now, apart from the purpose of financial statement, okay, you could also be asked about the information that is provided by financial statement, according to Ipsas 1. So we have the purpose, that it provides information about the financial position, information about financial performance, information about cash flow position. But what actual information does it provide about financial position? What actual information does it provide about financial performance? What actual information does it provide about cash flow? So the question could be purpose, of which you write those three. But when you are asked the type of information that is provided by the financial statement, you cannot write financial position, financial performance. You need to be more specific about the type of information that is being provided by the financial statement. And so on your screen, I'm going to look through with you about some information, specific information, according to Ipsas 1, that is supposed to be provided by the general purpose financial statement. So these are information that is being provided by the financial statement. Information that is being provided by financial statement. One, financial statement should provide information about the sources, allocation, and uses of financial resources. So you should show in your financial statement your sources of financial resources, how you have allocated them, and how they were being used. That is a very vital information that the financial statement should review. Number two, information about how the entity financed its activities and met its cash requirement. So your financial statement, according to Ipsas 1, should show information about how the entity financed its activities. How did you finance your activities? And how did the entity meet its cash requirement? That is the next one. Then also, from point 3, financial statement should provide information that is useful in evaluating the entity's ability to finance its activities and to meet its liabilities and commitments. So it should provide information that is useful in evaluating your ability to finance your activities and not depend on any other organization, and to meet your liabilities and commitment. So that is another information that should provide. Then also, financial statement should provide information about the financial condition of the entity and changes in it. The financial condition, what is your current state of affairs, which also relates to the financial position. The financial condition should be provided for in the financial statement to make it useful. And finally, it should provide aggregate information useful in evaluating the entity's performance in terms of service cost, efficiency, and accomplishments. So your financial statement should help us evaluate your efficiency, evaluate your service cost, and evaluate the accomplishment of the entity. Remember, this is a public sector entity, and so value for money is very, very important. So these are some information that, according to Ipsas, your financial statement should provide as part of achieving its purpose of providing information on financial position, performance, and cash flow. It should provide this specific information that I'm putting again on your screen for the final time so that you take note of. Okay. Now, finally, before we look at questions, let us look at the final aspect of Ipsas 1, we are looking at the overall considerations required in the presentation of financial statement. So, overall considerations required in the presentation of financial statement. Overall considerations required in the presentation of financial statement. Now, according to Ipsas 1, in your presentation of financial statement, you should consider these things very important, and then make sure you consider them in your presentation of financial statement. The first one is fair presentation and compliance with Ipsas. Now, very, very important. Let me add a small s to the Ipsas. So, according to Ipsas 1, in the presentation of your financial statement as a public sector entity, these considerations should be upheld. The first one is fair presentation and compliance with Ipsas. So, it should be fair. Fairness should be applied when you are preparing your financial statement. Be fair to your users, be fair to the government, be fair to the citizenry. Fair presentation, truthful presentation, and make sure that every part of your financial statement complies with a public sector accounting standard. We have so many Ipsas which we have done in the overview. Make sure that every part of your financial statement is in compliance with the Ipsas and the presentation is fair. That's the first consideration. The second one is going concern. We know of going concern from financial reporting and financial accounting. Now, in a presentation of financial statements according to Ipsas 1, you need to consider the going concern of the organization. Going concern means that the entity is assumed to exist into a foreseeable future, but you need to consider the going concern of your entity in a presentation of financial statement, such that if you realize that the entity is collapsing in the next year, you indicate it in the note. But you always need to prepare your financial statement with the mindset of the going concern concept. That is very, very important. And then you need to also consider consistency. Consistency is also very important, especially in the methods of treating some line items or some items on the chart of account. You cannot use one method today and the following year you change the method on the same asset. For example, if you need to do depreciation of an asset, you cannot use a straight line method for this year and next year you use the reducing balance. The following year you use some of the years they get on all that. Please make sure you are consistent year after year in the methods of treating like items on your financial statement. That is what you should know, and it's one of the key considerations according to Ipsas 1. And then also we need to consider materiality and aggregation. Materiality and aggregation. Now, we understand that materiality has to do with the relevance of information. We said that information is material if its omission could affect the decision of the users. Okay, so certain material information needs to be aggregated, others do not need to be. You need to be very careful in your consideration of materiality and aggregation. Sometimes, in order to present a fair financial statement, some items, no matter how immaterial they may be, should be left to stand alone on the financial statement. Those that are permitted by other Ipsas to aggregate, you aggregate them. But in all, we are saying that one of the key considerations in presentation of financial statement is materiality and aggregation. And then finally, we talk about offsetting. Offsetting. You need to be careful before you offset. You know, I have seen financial statements where someone buys, or let me say, the entity owes customer A 5,000. And then customer A, the same customer A, also owes the entity 3,000. Now, this is an asset, this is a liability. Now, instead of the entity writing assets, we owe customer A receivables 5,000. Liabilities, we have a payable of 3,000 to pay to customer A. Because it's the same customer or a person, they want to offset so that the 3,000 will not appear and they will only write the balance of 2,000, which is because the difference is 2,000. You owe me, I owe you. So they prefer to write the 2,000 as an asset and they are not showing the liability component nor the asset component. This is a typical example of offsetting. You need to be careful about offsetting. The standard do not really permit offsetting except it is required in another Ipsas. Okay, so we need to consider offsetting at every point in time. When is it important or necessary to offset, and when do we need to offset? Of course, for the purpose of fair presentation, offsetting should be avoided except it is permitted by a particular standard. And that is what we are saying. And the final thing you need to consider is comparative information. Comparative information. All right, so this will bring us to the end of the theoretical aspect or Ipsas 1's key components that you need to understand. Now, if there will be another video for Ipsas 1 for now, we are just going to look at questions and answers. For now, we have exhausted almost everything that we need to understand as long as the presentation of financial statement is concerned. Remember to subscribe to this channel if it is your first time. Share this video and let others also have a benefit. And until we meet again for another video, it is bye for now. Thank you.